The equivalent happened in Ethereum, and my forecast is it's a matter of time that Bitcoin gets to $100,000. It could go to 31st as the tide ebbs, as we mentioned. I fully embarrass the stock market because of recession. It'll drag Bitcoin down, but the facts of Bitcoin is supply is going down. That's by code.
Rising wheat prices indicate an imminent global recession, says Mike McGlone, senior commodities strategist at Bloomberg Intelligence. In a recent interview with Stansberry Research, McGlone discusses his outlook for different commodities, including wheat, gold, palladium, and Bitcoin, in the light of the Russian-Ukraine war. McGlone points out that Russia and Ukraine are responsible for almost one-third of the world's wheat imports. This will no doubt cause a severe global shortage of the commodity, and that is not to mention the fact that Russia was the biggest producer of potash in 2021 after Canada. This will undoubtedly put additional pressure on the rising prices of fertilizer. This is because potash is the most widely used and highly valued potassium fertilizer in the world. 90% of the world's potash is used to fertilize food crops. Considering these unfortunate facts, McGlone believes a global economic meltdown is just around the corner. Remember to like the video and drop your comments below. Thanks. Here's McGlone's assessment of how wheat and crude oil are about to change the global economy in 2022.
Yeah, I think wheat is one of the most significant in terms of how much Russia, Ukraine percentage of global exports, maybe up to a third, but it's also food. And to me, it's just part of that whole tide that I think is not a potential for recession, but almost a guarantee we will get a global recession out of this. And add to that, those of us who remember living through the Cold War, what you see on the tape that, quote, the Russians are coming has happened, and it's pretty horrible. So I think this is just part of that narrative. So wheat is up, limit up its second day in a row. It's right near the all-time high, which is significant. In 2008, it's taken that long to get there. But the key thing about wheat, Danielle, is it's typically you can bring on that supply right away. Most notably from Canada and the U.S. because you just plant more wheat and you bring on land that you weren't planting, or you switch to different crops. But it's that cutback in fertilizer supply from Russia. That's significant for the long term. A lot of that, Russia is one of the largest suppliers of nitrogen fertilizer on the planet, potash and stuff like that. And if you cut back fertilizer, we're probably going to have a long-term drop in yields. Now, that's not going to affect North American producers because we have plenty of nitrogen anhydrous, as we call it in the corn belt, which is where I'm from. But that to me is more enduring. And that to me is why it's significant. And it's also why I think the grain prices are going to stay high for a while versus crude oil and copper much more likely just to collapse, because that's what they typically do in these environments.
Interesting. Well, across the board, we are seeing banks and forecasts turning extremely bullish on commodities. Goldman Sachs saying we haven't seen a commodities crunch like this in the longest time. So overall, how does this change your outlook for commodities in 2022, Mike, given this black swan event that we're seeing of Ukraine, Russia?
Well, that's the key thing. Goldman Sachs was predicting it before for organic demand pull reasons, which I didn't really agree. This is a black swan event. This is the most significant armed conflict most of us have seen in our lifetime. With the analogy I heard this weekend, which I was very fearful, was to basically have the equivalent of a global suicide bomber with nuclear weapons who doesn't care. And there's not much we can do. And that's just what, so the significance is the market's priced in for a major supply shock, meaning that supply from Russia crude oil is going to leave the market. That to me is wrong, because a lot of that supply is going to go to China. That was an agreement from before the Olympics, and China is still the world's largest importer. The significance of the numbers are quite damaging for the price, and that is Russia's supply was maybe, in terms of net exports, maybe 6% of global exports of crude oil. It's about the same Kuwait was in 1990. I remember being in a trading pits, and crude oil basically went from 20 to 40. It got to about 2 times its, I'd say, 60-month average. We just reached that this morning. We got to 130. So if there's any sign of a market that's going to do what's done in the past, sure, we can keep spiking like this, but at some point you're going to turn around. And it's going to be down 50%, not in a day, but that's just what's happened in the past, because I think the greater risk is demand destruction, global recession, and that's happening. But the bottom line for us, Danielle, is North America commodity producers will crush it in this environment. The average cost of U.S. shale crude oil is now below $40 a barrel. That's been declining from 70 in 2014. And if you add into Canadian oil sands, there'll be a massive surplus of liquid fuels. I say liquid fuels because I'm from a farm background, and a significant portion of unleaded gas is now ethanol. That this is going to be a major dichotomy. It's going to push Europe mainly into a recession, push Russia, I think, into a complete economic collapse, and the U.S. and Canada should come out fine once we get past this recession.
The world continues to throw sanction after sanction at Russia. There have been reports that the United States may freeze Russia's gold reserves. More of that before we end the video. However, while European countries are turning their backs on Russia, there is a small issue of the fact that many European countries are dependent on Russia for energy. In 2021, Russia was the largest exporter of oil and natural gas to the European Union. About 40% of the gas consumed in the European Union last year came from Russia. Germany, Italy, Estonia, Poland, Slovakia, and Finland get a large amount of their gas from Russia. With the sanctions, this would mean all these countries have to look elsewhere for energy. McGlone believes this would mean a faster transition to renewable energy for us all.
Oh, gosh, yes, completely. It's just a matter of time. I mean, we all know Germany kind of kicked out the nuclear too fast and went solar too fast, but that's just going to completely accelerate the incentive to go renewable. I mean, I have an electric car, I have solar panels, so I know there's some experience. They're great technologies, but you just have to make sure you have that backup. My electric car is a plug-in hybrid because when I need gas, it's great. You know, it's really cold. It's nothing like fossil fuels. So it's going to completely accelerate. And I think this is going to push Russia back to, way back to the old world that is dependent on fossil fuels, and the rest of the world that will be no longer dependent on fossil fuels from dicey sources. And we're going to find alternatives. In the meantime, the U.S. is the world's largest exporter of liquefied natural gas. That's going to accelerate, not so fast, but it'll be all going to Europe, a lot of it. So the whole natural gas will go up on a world scale. But if you look at the U.S., a price around 5 on the screen is well below the peak from 12 in 2005, and it's still about 2 times the U.S. cost of production.
McGlone also talks about the rising prices of gold. The commodity strategist predicts that gold will hit $2,000 per ounce and never look back. He explains that gold should have gotten here sooner, but its market competition, Bitcoin, has not made that easy for the commodity. Here's McGlone's explanation and his $100,000 prediction for Bitcoin.
I think it's a matter of time that gold crosses that $2,000 an ounce Rubicon of resistance and never looks back. It's so overdue, technically, fundamentally. I think a key indicator for us, Danielle, it's obviously it didn't do well in inflation. It's not doing well in inflation. It's deflation is a greater risk. The key indicator I'm watching is that U.S. 30-year long bond, which I expect to decline and expect the gold to break out. But we have to admit, gold does have major competition from the digital version. That's Bitcoin. So I think gold is naked, if not paired with Bitcoin anymore. Now you see Bitcoin's down in the year, but it's way outperforming on a risk-adjusted basis the stock market. So what you're seeing right now, I think, is the whole tide is going out, which is helping gold. Finally, the stock market is giving up some of those excessive gains for the last few years. Gold should benefit. Bitcoin's going down initially, but then I fully expect it to come out ahead. But the key thing about gold is it's being replaced by digital gold. That's a fact. It's a question of endurance. And I view gold as basically naked, if not paired with some Bitcoin in portfolios. The equivalent happened in Ethereum, and my forecast is it's a matter of time that Bitcoin gets to $100,000. It could go to 31st as the tide ebbs, as we mentioned. I fully embarrass the stock market because of recession. It'll drag Bitcoin down, but the facts of Bitcoin is supply is going down. That's by code. Demand and adoption are going up, and I expect that to continue. And the key fact about Bitcoin is it's less than 1% of global portfolios, yet I fully think that most managers on the planet who run money realize we got to have some of this, just because if it just continues to do what it's been doing in a world going digital, this is a global digital benchmark, might as well get allocated. And it's proven all the naysayers wrong. So this year to me is another one. It's down about the same as the NASDAQ, despite the fact it has a much higher volatility. So I see divergent strength this year. I think it can go lower in the short term, but in the long term, to me, $100,000 is a matter of time.
While the world prepares for a global recession, a bipartisan group of U.S. senators has proposed that the Biden administration freeze Russia's gold reserves to make it more difficult for Russian oligarchs to bypass the sanctions imposed on them for the country's invasion of Poland. The free world's sanctions are devastating Russia's economy, and as long as Putin continues his unprovoked and horrific invasion of Ukraine, we must keep up the pressure, Senator Angus King said in a statement on Tuesday while announcing the legislation. The senator stated that Russia's massive gold supply is one of the few remaining assets that Putin can use to steady Russia's inevitable fall in the face of all the sanctions against it. King's bill, which is titled Stop Russian Government and Oligarchs from Limiting Democracy, would give secondary sanctions to American corporations and institutions deliberately transacting with or transporting gold from Russia's central bank reserves. Americans selling gold physically or electronically in Russia will also be subject to the secondary sanctions. Currently, Russia holds $130 billion in gold in its reserves. According to senators, Russian oligarchs and government officials are laundering money through gold due to a loophole in the existing sanctions against them. As a result of the loophole, the country is able to buy gold to compensate for the free fall of the ruble. It then sells the gold on the international markets in exchange for strong currencies. The new sanctions proposed by the senators will stop Americans and American entities from purchasing Russia's gold and hopefully make the earlier sanctions count. By sanctioning these reserves, we can further isolate Russia from the world's economy and increase the difficulty of Putin's increasingly costly military campaign. We urge the speedy passage of these bipartisan sanctions to hold Putin accountable for his crimes, King stated on Tuesday. While people like Hillary Clinton are focused on cryptocurrencies as the loophole in the sanctions against Russian oligarchs and government officials, it seems the real culprit is gold. If the new sanctions pass, Russia will have a more difficult time evading the sanctions and be more open to discussing with Ukraine. While President Zelensky has reiterated that Ukraine will not surrender to Russia's onslaught or capitulate, he says he is ready to make some compromises if Putin will end the attack. In an interview on Monday, the president announced that he is no longer interested in joining NATO. I have cooled down regarding this question a long time ago after we understood that NATO is not prepared to accept Ukraine, Zelensky said in an interview aired Monday night on ABC News. The alliance is afraid of controversial things and confrontation with Russia, the president added. Thanks for watching the video. Remember to drop your comments below and smash the like button.